team who have shown solidarity for their countrymen and countrywomen back home. Now, let's take a quick check at how the commodity markets are shaping up. It's a slippery slope as far as crude oil prices are concerned, and that's our top story on the show this evening. Brent has slipped below the $84 per barrel mark. In fact, even touching as low as 82.82 in early trade, cracking over 5%. This is the lowest since January this year. Supply fears have somewhat reduced, but concerns over demand from China continue to loom. Remember, there was a fresh set of lockdowns as a new variant seems to have emerged and a new spike in cases. In some regions of China, they've moved to online school once again as well. The strengthening US dollar is also a problem that's weighing in on investors. Reports suggest Saudi Arabia is eyeing a massive OPEC plus production boost ahead of their meeting in December. The OPEC and Russia may well hike production by 500,000 barrels with the embargo on price caps on Russian oil nearing on December 5th. Let me go across now to José Torres, senior economist at Interactive Brokers, just to get a sense of what's going on. Jose, great to have you on the show. Thank you for speaking with us today. Can you hear me?
Yes, I can. Good evening.
Good evening. All right, give us a sense of what is really happening with crude prices, and do you see this trend continuing?
Well, four primary reasons right now. First, you have uncertainty over Chinese lockdowns and demand from there. Two, you have uncertainties on sanctions on Russia by the G7. Three, you also have a stronger dollar, making it more expensive for sovereigns to purchase crude oil. And four, you have the possibility of a global recession in 2023 that's creating demand destruction or expectations of demand destruction. So while supplies are tight, the expectation of less demand in the future due to an economic slowdown are offsetting tight supplies at the moment. In terms of what I'm expecting oil prices to stay flat to down, albeit not that much, because the tight supplies that are out there are going to underpin oil prices going forward. So we're not going back to $40 oil for some time.
Range then. And I think that's an important point. We're not going back to 40. We're possibly not going back to 60. Where do you see the bottom here?
It's tough to call bottoms, especially with uncertainties during the winter. But we have been selling off quite aggressively. So I will say that we probably will stay above 50 for the next 12 months.
In terms of longer term sort of factors which will come, and you spoke about a global recession, China demand, etc. But as we roll on, and we're obviously in the middle of winter months as well, the demand is going to go up, isn't it? So do you think that some of these factors are a little transient, especially that some of them are focused a lot on China and China's announcements today of fresh cases, etc.?
Well, again, I'm not quite sure if demand is going to be stronger next year. You have the Chinese lockdowns that have been going on for a while now. You know, we're entering 2023. COVID-19 started arguably late 2019, early 2020. So if you have the Chinese continuing to lock down, if you have embargoes and sanctions that don't manifest with the Russians, and then at the same time, you have a global economic slowdown where consumers and corporates are purchasing less oil because they need it less. You could argue that prices are going to remain subdued and you won't have that strong of a rally later on in the year or early next year.
All right. Thank you so much for that, José Torres. They're talking about the trend going downwards, at least for some time, but likely to go back to the days of $40 per barrel. That seems like a very, very long way off right now. Thanks once again.